social media, maybe YouTube, maybe Facebook, maybe Instagram, maybe TikTok, who knows where we're gonna come at you, but hey, we wanted to record a really quick video here at Clear Mortgage just to discuss an ongoing trend right now in home ownership. So if you currently own a home, I'm sure you've heard rates are low, which is awesome. It's great. But I wanna make sure if you are considering a refinance, maybe to lower that monthly payment, maybe to consolidate some debt, maybe to pull out some of that equity that you have in your home to, I don't know, finish that deck or that patio that you wanted to put onto your house. Whatever it is, if you are considering a refinance, you really need to make sure that it's in your best interest and smart. So what I wanted to create today is just some things that you need to focus on or need to be aware of when you are possibly considering a refinance. So here we go. Number one, make sure that you calculate your break-even point. How much is it going to cost you to refinance? Whether that's closing costs, title costs, new escrow account establishment, whatever it is, make sure that you add that up, take into account your savings, divide it by your savings, and figure out how many months it's going to take you to recoup those costs. Because I'm telling you, if you're not gonna be living in your house for that long, it doesn't make sense. Make sure that you break even before you plan on moving from this current home, okay? So whatever it is, make sure that you calculate it. All right, another thing to look at. Don't be so focused on APY as opposed to APR. Now what that means is don't get all crazy about the interest rate if you're not taking into account the APR, which is actually telling you how much you're paying for that interest rate, okay? So there's two things that you need to look at. Interest rate, number one, and number two, your APR, which factors in how much you're paying for it, okay? So if you are shopping, which I encourage everybody to shop, make sure that you're getting the best APR for that interest rate that you are looking at. Please, 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 if your credit has changed and maybe significantly in the last couple of months or whenever you're looking at refi, don't ignore your bad credit right now, because the amount in interest rate increase for a lower credit score is pretty significant. So unless this is a situation where you desperately need to pull out that equity or desperately need to consolidate some debt and need to take advantage of it now, work on your credit, work with a qualified mortgage professional to bump up your score enough to take advantage of some of those top tier rates, okay? Another point, if you are looking to refinance, don't be fooled with some of these advertising of a no-cost refinance, okay? Not all companies are like Clear Mortgage. We at Clear do not have lender fees. Most mortgage companies do have lender fees. How they are, quote unquote, selling a no-cost refinance is, in some cases, rolling in all of the fees associated with your refinance into the loan, okay? So when you are refinancing, take into account how much your loan amount is increasing, and then truly determine if it is a no-cost refinance. Does that make sense? So what I'm saying is, they might say no cost, but what they really mean is no funds due at the table to refinance. So always take into account and look at that. I know it's very tempting when you're refinancing to just go ahead and pull out some of that money, some of the equity that you have in your house, whether that's 20%, 20,000, 15,000, whatever you want to do. In some cases, or in any, I guess majority of cases, it is not always in your best interest to pull out your equity. It really depends on the situation, on what you're planning to do with those funds, and it's not always the smart thing to do. So if your loan officer encourages you to tap into the equity that you've built in your house, unless that is part of your overall financial plan, it's not always the smart thing to do. Don't always pull out your equity, all right? Remember, your home is one of the biggest assets that you will ever have in your life. Allow it to be that, an asset. Allow it to grow wealth for you. Use it if you need to, but don't always pull out some of that equity if you don't need it. And finally, if you are looking to refinance, one thing that I strongly recommend is to make sure that you are refinancing into the correct loan product for you. There are loan products that exist that have much lower interest rates, could result in a much lower payment, but might have some long-term, very expensive repercussions from using those loans, okay? If this sounds confusing, please reach out to me. But what I want to really really, really, really hope that you focus on in this last piece is that when you are refinancing, make sure you are refinancing into the best loan product for you. And I'm not talking FHA versus conventional. I am talking also term. Example. Let's say that you approach me as a potential client and you really want to go into a 15-year mortgage term, okay? Hey, more power to you, but what I am going to ask you is if your mortgage payment will increase, because remember, we're cutting your term in half, so in most cases, your mortgage payment will increase. Are you already saving for retirement? Are you already putting away money into a separate account? Are you already maxing out your 401k? And the reason being is it would make more sense to take advantage of the low rates now, keep your mortgage payment low with a 30-year term, and ensure that you're filling those other buckets for life planning before you cut your term in half, okay? There is no penalty in most cases, now full disclosure, in most cases, for putting additional principal on your mortgage payments. So as long as you are taking advantage of saving for retirement, maxing out your 401k, sitting with a professional and ensuring that you're planning for your future, then I may suggest cutting your term in half, utilizing a 15-year term to take advantage of those lower rates. So in summary, if you are considering a refinance, it's not always cut and dry. Please make sure that the mortgage professional you are working with has your best interest in mind and really breaks down the refinance process and truly makes it clear. Bye.